All right, we are live. Good morning, y'all. B. James here, day trading dad. The question today is not, is the market bullish or is the market bearish? Or am I going to be profitable or not? The question of the day is, am I going to behave like a trader who will be profitable over 50 plus trades? In other words, will I be a professional trader today? And here's my Consistency Lab trading journal. Looking at last week, we can see I had an A grade week, 95% only missing a half an R on the week. That's the first week in 4 or 5 weeks that I actually was green. I think I had break even in red weeks pretty much for 5 weeks. Part of that was the market, but as the weeks went on, that turned into my problem. And the last 2 or 3 weeks, I started slipping in my discipline. So I started tracking my performance, and lo and behold, guess what? It was a nice and green week last week. Additionally, I started using this performance tracking journal for my backtesting sessions, and let's switch over to a backtesting session. And what we can see here is this is June 2025. I was backtesting the all-time highs from last summer to compare how price was different than the current all-time highs, and it certainly is different. They're both all-time highs, but price then was different. Price was delivering differently. But look at this. And we have solid high A grade performance in this backtesting session so far for 3+ weeks. And in this backtesting session, my expectancy on my trades were through the roof and my profit was through the roof. So far I have 4 weeks of correlation between ignoring my P&L and focusing on my performance, and then the byproduct is a positive P&L. Now that's not tons of data, that's only 4 weeks. So I'm going to keep testing this both with my backtesting session here and in my live trading session and see how this really improves my P&L curve, because it already seems to have been made an incredible difference. So zooming out, going to the charts, what do we got for today? We got 7 minutes until open. So I don't know the bias today. There's a lot going on. We have a weekly change in state of delivery, a daily change in state of delivery. The market is, I don't know if obviously the market doesn't care what I think, but it's significantly overextended, but it can still keep going. So it makes sense to have some form of a retrace. Let's even look at the charts. Go over here. Yeah, look at the daily chart. I mean, look at all this price action below us. And it would make sense if we go here on the weekly chart. It would make sense after this weekly change in state of delivery to come back down and test 50% of this range and balance some of this out before continuing on. Doesn't mean it has to, but it just means I'm a lot more open to short ideas now than I was last week. Same thing here on the daily. We have a change in state of delivery. So what? We trade up some, either create or fill in this inefficiency right here, and then continue trading down. Like there's a nice target right here. Even if we had taken this low, I would be more bullish. But we didn't take this low. There's no SMT at this low. So it makes sense for me for at least maybe this week price to come back down, trade into here, and continue on. Here on the 4-hour chart, in terms of shorts, if price trades up into the consequent encroachment of this fair value gap, I could possibly see shorts. Similar on the 1 hour, we have this fair value gap. But also, I can make a case for longs as well. I can make a case that this is a London protraction, that this is the low of the day. We can see price is just aggressively expanding pre-open past the 130 ADR. And we have a couple of things. There's a 70% chance the New York AM session continues the London trend. What's the London trend? Well, it's bullish. Also, to add to that, we've tapped the 130 ADR and flipped it even. So we're above the 130 ADR. When the 130 ADR gets flipped, that also increases the likelihood of continuation. So in that case, I could see the 15-minute potentially trading down into one of these gaps for longs. Now, below us, there's lots of juicy targets. There's the midnight open right here. There is London low if it wants to order pair. There's the new week opening gap, and then there's the regular trading hour gap. So really, I think today's going to be a lot about letting the charts do the talking as best as I can and listen as best as I can, and trying to see what makes sense as the candles print. So yeah, I'm open to both ideas. I'd prefer longs by a little bit still. I'm not stoked on shorts quite yet, just because what I've learned in the market is the manipulations to sell side in a really bullish market are just manipulations, or the downswings to lows or near lows are manipulations. So this whole thing, it could just be a super deep retracement to an 886 level or something like that in this whole thing before continuing higher. So that said, I'm not convinced it's short either. So yeah, what do we got? It's 3 minutes until open. We can see that from this breaker down in here, so this lowest breaker, the price has currently reached 2.5 standard deviations, which would make sense for a reversal at this level of right here. But as well, here's the true breaker from this high to this low. And if we look at the true breaker, or what I would call the true breaker, because this feels more like a minor breaker with just like a lower time frame swing, but this is actually a 15-minute swing in my opinion, then we still haven't even reached 2.5 standard deviations, which would be way up in here. So I'm leaning long, but could be open to a short depending on how it presents. If 930 trades up, which I guess it already let's look at this. 930 already has pretty much just traded up. It makes more sense for 930 to be short. Building up some of this trendline liquidity here. It's not amazing, but it's there nonetheless. We look at the hourly open here, 9 o'clock has almost no tail on that candle. We've tapped into the previous day equilibrium. We've taken previous New York PM high. We do have a New York lunch high right above. And we haven't tapped into the 1 hour gap or the 4 hour gap consequent encroachment yet. So going to keep that in mind. The other thing I'm looking at for today is maybe trading with a little less size. I saw a really good short, I think it was PJ Trades, and he just basically made this point: is your problem X, size down. Is your problem Y, size down. Is your problem Q, size down. He just went through this list of stuff. And he really did make a significant point, and it made me think about, like, with my size and my trading, it's like, well, yeah, if I take that loss, it stings slightly. Or if I take that win, it feels slightly exciting. And it was like, maybe I'm trading with too much size still. And maybe that's me being greedy, wanting to just build accounts. So I don't know. We'll see what today presents. I didn't fully make a decision on that over the weekend. So maybe I'll just size down some and meet it in the middle or something like that. Because I know for myself, when I've traded, 930. All right, let's see what happens. So now YM has already traded down into a discount level and formed an SMT. Here on the 1 hour, we're trading into a 15-minute fair value gap, but there's just no liquidity targets. So I don't feel like I could long anything in here, even if it is long. We kind of have this gap right there. Yep, that's a little inversion above. But this long, it might be what it wants to do, but I can't take that. 171 ticks. So even just curious for sizing. 2 would be 170. So that's the minimum I could pretty much do. My system requires that I take partials. YM is blasting through the roof. There's a 15-minute SMT down in here. There's a 15-minute fair value gap that it tapped into right down in here. But I can't take that. We do have external range liquidity right there. A nice break-even point. but there's just no targets left, unless I'm looking on a different time frame. Which even still, looking at the moment, it looks like it wants to trade down further. I'm over here on the 15. Like sometimes there's equal highs above, and they're on a different time frame. But I like this better. I want to see NQ trade down, whether it is short or whether it's for longs. I want to see it trade down either way. So here is this inversion, and here is this bearish breaker. And I guess technically we have a bearish breaker right here, a little one. Now, the other thing I'm trying to keep in mind this week, remembering, is I'm here to read price. And that really helped me last week. Remove the focus from, why is my mouse cursor on multiple windows? Remove the focus from, is this the model? Is this the model? Is this the model? And back towards syncing up with what price is doing. So we have some nice relative equal lows down in here. We have several tailless candles. And of course, then this swing low right here. All right, equal lows are swept. Still not stoked for longs with what I'm seeing. You know, it could make a gap right here. And then we have only just these two kind of relative equal highs, and then buy side up in here. And that's not that significant. It would have been nicer if it kind of zigzagged down and generated some more trend line swings to target potentially, but we are in a 15-minute gap. We're in a 1-hour gap. There's currently SMT. We've reached 2.5 standard deviations of this 1-minute breaker. So just even considering here, similar kind of situation. If I were to go long, 2 contracts is 170 risk approximately. About the lowest I could go. So this market, unless I wanted to go 1 contract, isn't even really conducive to sizing down. But my system, I take partials at 1R and then I peel the rest off at 2.5R. I'd have to change my system to do any less than 2 contracts. All right, we have a first presented for value gap. This green box right in here. Let's see what happens here. I could see longs from this level. If it's very bullish, it could be long from here. I would actually prefer if it traded down towards this swing first, building a little bit more liquidity up before a long presented, but I feel like if it presents here, I should take it. I guess the question is it light bulb? Is it a light bulb trade? Not totally light bulb, not bad, somewhere in the middle, and I don't know what to do with that. So YM is retracing all the way back to 930 open. ES is flipped the 930 open bearishly, and 930 open is right here on NQ. All right, this could be it. What I don't have is I don't have true clarity in my rules on if liquidity is not as strong as I want it to be. All right, any which way it rejected so far from that gap. Let's see what it does with this next candle, 939. Also reminding myself, I don't have to take a trade today. That's the energy I need to show up to the charts with. So price is not making a V-shaped recovery out of this level. At this point, I like this candle closing down here. For two reasons. One, if it starts to trade back up again, I'm going to be even less interested in this setup because of all the messing around it did down in here. And so I'll be less likely to want to take it. And additionally, if we're going to create this bearish order block right here, coming trade down for more sell side liquidity, I'd like to see that. I couldn't justify shorts from up here. I'd want to see it trade up a little higher and take this high before any shorts, because there's a 4-hour fair value gap right here and a 1-hour gap, consequent encroachment, all that right there. But the better liquidity is definitely for sell side at the moment. These equal lows, this it's too steep of a trend line, but nonetheless, it's liquidity, this swing low right there. That's actually, if this starts pushing higher, that's a pretty strong candle between this and if this closed anywhere up in there. But let's see. Patience pays. All right, so that did a bullish close, but it wasn't closing like what up in here. This one could. I still don't think I like it because we're kind of building some local trendline liquidity. On the 32nd. And also, that's a lot of consolidation for 9:30 open, in my opinion. So what's our 9:30 ranges? I guess that's 700 ticks, 187 handles. All right, so here's this candle. The 15-minute looks solid. Boy, this is a tough call. That's too high above. Whoa, that's bullish. It's going to probably run without me, but that 15-minute looks really good, and that's starting to make me like this setup a little bit better. We have a minute 30 left on this 15-minute candle. But with this large of a stop loss, I don't really want to... I can't mark it in up in here. I'm curious to see where this next 15-minute candle kind of closes. I could have missed my entry right there, but... We have a tailless candle. It's building trend line. It's not the strongest liquidity up in here. I just can't grade this as an A-grade setup, even if it goes without me. So here's the new 15-minute candle. Want to see it trade down if it is bullish. I'm starting to slouch in my chair again. So you could see that day trading dad needs a haircut desperately. So here would have been TP1 if I would have marketed in. I had two opportunities and I didn't take either. I'm not convinced it's the move anyway. Usually what we see is when my model appears, usually price goes into a distribution phase and it gets pretty hard to get into it. Usually it doesn't give two opportunities to get back into it. Usually if I miss it, I miss it because it just wants to accelerate towards its targets. Oh, we do have equal highs above. I can't see that. Perfect equal highs. I didn't even see that until just now. That's okay. I think, so this would have been a partial and a break even. If I would have taken that, I would have moved my stop to break even after the partial. I'd like to see it trade down, and I'd like to see a 10 a.m. reversal. That would be, I think, a lot nicer looking. If we could take this sell side right here, these just trend line, take this sell side, come down in here. I think that would look better for longs. We've got these perfect equal highs. We've got relative equal highs. We've got buy side. Then here's this trend line liquidity building. Or it could be bearish. That's totally possible too. But I feel good about missing that setup. And that's important. That's an important measurement. It's easy to forget to think about that when it's, profitable. Like, oh, but I could have taken that and been like, oh, I'm up took a partial, cool. But if I would have critically thought about that setup, I would have been like, or maybe if I would have rewatched myself on this recording, I would have been like, I don't know. That might have been a little bit of greed right there. Because I don't have any expectation for today. I don't know what price is going to do. I don't know if I'm going to get a trade setup. I don't know if I'm going to get a setup and not get an entry. That's possible too, like I was describing earlier. It could run without me. I could get a setup and take a partial. I could get a setup and take a loss. I could take 2 losses today. Today may make me feel closer towards being a professional trader, or it may not. Today may get my accounts to a level that I'm expecting or not. Today may take my accounts down to a level I'm not expecting. I don't know the outcome of the next trade. It's nothing more than a coin toss. I need more of my latte, apparently. So I let go of my expectations of trading. I let go of my expectations of the trade today. And I let go of the expectations of trading. And I think that's important too. I had to really focus on that a lot, probably late winter, where I had all these expectations for trading. Trading was going to make me profitable by a certain time. Trading was going to give me this by this time. I should be here by this certain time, and it really caused a lot of unnecessary stress. I feel like my screen just stopped moving. It did. My internet all right? And like, if you treat trading as a hobby where there's no timeline, it just is, you do it because you want to and you enjoy it, it becomes very different. It's no longer, I need to be profitable by fall so I can quit my job. And I'm not saying that's like easy to think that way sometimes. For so many people, they need the income, or they hate their job and want to do something different. And so it's kind of this, I want it to work at ASAP. And that expectation really screwed me up. And so it took a lot over the winter to really focus on letting go of trading. And I find in life, when you hold on to things too tight, God or the universe, whatever you consider it, it tends to take those things away. It tends to make them take longer. It tends to make them be more difficult. And it's easier said than done to let go of something that means so much. And I'm not saying I can do it in all instances. I'm locked out. I see. My browser did do something funny. Let me see. I'm logged in somewhere else. There we go. I don't know why it does that. Okay. I'm going to check to make sure I'm on the right account. Yeah, all good. So yeah, look at this opening range is not really going anywhere. And something to keep in mind here today is the trader who wins, okay, is the professional trader, not the amateur trader. The amateur trader is inside the emotion, and they are the emotion, and they act erratically. So think about that with, reflecting back on your trades. Do you act erratically? Do you make these decisions and then flip-flop on them? Whereas the professional trader, they observe the emotion. They see the emotion, but they follow the plan. And one controls you, and the other you control, which I thought that's a powerful way to look at it. Are the charts in control, or are you in control? And that's the interesting thing I think about day trading is I've done a lot of like self-development work in my life, all kinds of workshops, and I've read and listened to probably a good chunk of the audiobooks that anyone would think of in terms of personal development and higher consciousness and self-awareness and all of those kinds of things. And my personality is a hyper self-aware, hypersensitive too, which is a problem in and of itself, but it also means I notice every little thing. Very female characteristic, I suppose, because most dudes are hardly notice they, cut their finger off with a circular saw. Well, that's not true. I could make some really poor jokes about the current generation and how big of sissies they are. They probably aren't watching me anyways. But for my generation, that was very kind of masculine persona that's common and exemplified. And for me, more on the sensitive side. So it means I can sense anything, like my emotions are slightly off. I know it. If something's slightly off, I know it and I know why. Where am I going with any of this? I forget why I'm telling you this. Oh, so all of that personal development work I've done in my life, and I've done it since I've probably been 25 years old or something like that. I'm 42 now. I used to live in Denver and I was a computer programmer or a web programmer. Like out of the blue, I just quit my job and I moved to the island of Kauai, and lived in an off-the-grid jungle hut and like sat on the beach and read Eckhart Tolle books and, that kind of thing. And sat around all day and just meditated. Kind of monk-like, I suppose. But why I'm saying this is, despite all of that background, I can't believe how much trading has pushed me to intricately evaluate my discipline, my self-worth, my control, my emotions, my thoughts, my greed, my fear. I can't believe it. It's such a mirror, and of course relationships are too. My wife and my kid, they do the same. But for whatever reason, I sit here at the charts, and even in backtesting, and that's what's so wild, is backtesting can do it. Backtesting can cause you to see things that you hadn't seen in yourself. And so that's the real game in trading. Reading order flow. It's why I like to sit here and talk about this stuff, because cool. I don't know. I started out reading order flow, but there's not much to read at the moment. And so I kind of wanted to just go through some of my scripts, that I call them, things that I read while I'm sitting here trading, just real time. Since I didn't get to it this morning before the session, I'm just looking at some of these reminders that I've written myself and printed out. And I keep the current ones that haven't been ingrained quite yet in my head out on my desk, so I can just kind of read them actively as I trade. Now this is looking much nicer for a long. If we take sell side right down in here, 10 a.m., this to me feels like something I'm more open to putting risk up on, even if I'm wrong. This other trade, it was definitely like, I don't know, it could just rip. Maybe I should take it. Dang, still 200 to 190 risk. So 250 is my what's the correct? I don't have to say correct. Ideal risk for this account, 250 per trade. And I wanted to be more down in like the 150 today, just to kind of take off some of the edge, but I don't know if I get that option. Because here, if like this is an inversion, we technically have this volume imbalance. That's nearly 250. This market is so volatile. All right, we swept a 1 hour low. We have 15-minute SMT. We have some real nice trend line built up in here. So this could potentially be accumulation manipulation. This could also be a market maker sell model. So I'm looking at that. We're in discount on the 15-minute chart. We're in a 1 hour fair value gap, though we're not at consequent encroachment. I think that's somewhat okay as long as if you're on sides with the market, it doesn't always go to consequent encroachment of the gaps. All right, we got a new 10 a.m. candle. All right, looks like it might do it, and I think I'm up for this long, even if I'm wrong. Okay, so 3 seconds and it's not going to close above. That's all right. If this candle trades down into this fair value gap and then trades up, I like that better. So now I want to see it trade up. Gives me a little bit more room with my stop loss, potentially. Some nice expansion. This 2-minute candle also looks like it might close up there. Two-minute candles closing here at the same time. All right, we got some beautiful expansion. This is what I want to see. I don't want to see it go too far, though. And I also want to see it reverse. Well, let's see. We got another candle or two is fine. Looking a little bit more bearish. But let's see. So we still have a minute 40 on this 2-minute chart for that candle to close. We have a 3-minute gap. We don't have a 3-minute gap, or a tiny one. Yeah, not looking like it wants to. As we inverted this gap right here. All right, it looked like it wanted to start distributing, but now it don't. Kind of the pattern like sell off, retrace, sell off, retrace, sell off, retrace. It could be bearish. That's for sure. Oh, look what then it teases you for the first 10 seconds of that candle. It pushed up halfway back up in there to go. Oh, maybe it's gonna go. Maybe it's gonna invert that. And now it actually might. Didn't close above. The 2-minute could. All right, 3 seconds. It's not going to do it. All right, 30 seconds. Let's see if it just runs away or if it gives an entry. Looks like it stands a chance of closing above and not running away. 5, 3, 2, 1, closed above. All right, we'll go in. I went in with 1. I figured it was better than risking more than I wanted to. So what we'll do here is we'll just target this high. All right, so we're thinking open discount manip for bullish continuation today. That's the logic. We have 1 hour sell side liquidity. We have SMT. We have a 1 hour fair value gap. We have local high probability targets. We're in higher time frame discount. One thing I do need to note here is, oops, I don't want to do that. Just want to note 1R for a break-even point. All right, so higher time frame aligned. I guess it's unclear, maybe. So maybe that's not a good thing. Time is matched discount premium, yes. Major liquidity sweep, yes. ERL to IRL, yes. No unresolved for this buy to be bullish, yes. mostly mostly A grade plus displacement. No news, high probability conditions. So the 15-minute, yeah, this is possible. I'm gonna, I'm gonna say mostly on that because of Friday's sell-off. Price action. I'm gonna give price action a B. It's clean, but it's on a, it's still kind of like it's sticking in a range. All right, we have 30 seconds left on this current 15-minute candle. I don't have a great read on that 15-minute chart. I don't really like how it's just sitting there consolidating around my entry. That's not cool. Ooh, look at the 1 minute. Like the 1 minute was okay until I entered. Ooh. That makes me want to exit. But my rules say I shouldn't. Ooh, I don't like that 1 minute. Like literally the candle I entered on it just went nasty. All right, I'm out. All right, so partial expense. No. All right, trade management. I think I did a fine job managing the trade. Emotions, relatively neutral. Slightly doubtful, but waited patiently for exactly what I wanted. I think that's an important note too. Ooh, look at that. Oh, so that would be interesting here. I just realized my stop loss is improperly placed. It should have been a little bit below the inversion fair value gap, usually aligned with the body of this candle. So that's interesting thing. Trade management. Maybe it doesn't matter today though. So, all right. So I'm going to say this is a maybe because we have lower time frame ERL, but higher time frame unclear. Higher time frame is ERL very far. That's the way to put it. So even here, I feel like I'm kind of downgrading this trade as I'm continuing to look at it. All right, though. And what we can see is we just really haven't even left this zone here all morning, which is still a huge zone. Gosh, 1,000 ticks, and we haven't even moved. We're tapping into a daily volume imbalance that I didn't notice. That's what the resistance level is right there, a daily volume imbalance. All right, so it's just doing nothing. Now it's building the trend line up. You can see that right there clearly. All right, nothing to do but wait, or maybe even log off. Oh, watch, it gets closes way up there. I'm gonna be a little bummed if my error and stop loss location. That's totally my fault, because my stop loss goes down here. So could be on me today. All right, 10:08. The long I anticipated, resented, took it, loss. Oh man, look at that. So actually, let's look at this. I'm going to do it differently. I'm going to put that there because that's what happened. Let's hide that one. So roughly above the gap. So right there should have been the stop, which meant here should be roughly my break even. So just seeing this price action, you know, here's my break even point. I would have gone break even probably right now. 2.5 would be up here. All right, break even. Oh man, that stings. That's my fault. But I'm really happy that I waited. I was patient. I even sized down some. I recognized the conditions, but I just screwed up where my stop loss is supposed to go. I don't know if like switching time frames I got. I don't even know why. Even still on the 1 minute chart, it would have, I still would have put it below this right there. All right, so it tapped 1R. Break even now would be, I think it tapped 1R. Yeah. Okay, well, that's my day. I'm not going to get another setup probably for the next little bit. Nor do I think, given the price action that I'm seeing, I'm not feeling like it's a day to push it or a session to push it. Maybe I will. I'll look at lunch session and look for a lunch trade model. And the 5 minutes looking a little ugly. Bummer, but it's part of trading, I guess. And especially when it's my error, then that's a lot easier to fix. Which is just a bummer. I had all the hard stuff right, like the emotions in check and all of that, but I screwed it up. My fault. All right, well, I'm gonna end it here and probably be back tomorrow. See ya.